Welcome back to Fast Market, everyone. Kevin Hinks and Kevin Green back for our final segment. Before I bring in George Tsilis to cover Meta Platforms, let's do a quick market update. See where the markets sit here as we get towards noon hour in Chicago and 1 o'clock in New York. The S&P 500 down less than 0.1%, about 4 points to 6114. The NASDAQ 100 down again 0.25%, about 58.5 points to 21,842. Dow Jones Industrial Average down 0.1%, 46 points to 44,518, and the Russell 2000 now up about 0.2%, $4.35 to 2318, almost 2319 on the Russell 2000. All right, now let's go out live to Salt Lake City, Utah, to Mr. George Tsilis. He's going to cover our final paper money trade of the day, and that is Meta Platforms. George, the street estimated about $51 to $58 billion in spending. Mark Zuckerberg comes in $65 billion in Capex spending. That's for 2025. George, your thoughts and your coverage of Meta Platforms.
Well, I mean, I think, I guess in the traditional context, if there was a call for more Capex spending, we would see typically stocks fall. But if you notice the environment we're in right now, it seems to be the opposite. I'm going to use Oracle as an example. Based on their expected Capex spend, the stock jumped higher. So that might be the environment we're in. So irrespective of that additional 15 or so billion, roughly speaking now, increase in Capex that Zuckerberg basically declared they're going to spend on that data center this year, the stock may just continue to the upside. Now, they're going to be reporting, obviously, next week in earnings, and this is a pivotal one. I mean, you're talking about the data center that's essentially a 2 gigawatt data center. He's got the map out the size of Manhattan in terms of square footage and the expense of that. And if you look at the Capex of Meta Platforms and Google and Amazon and Microsoft just in the last year, it's like $250 billion. I mean, these are huge numbers, but they're just going to continue to spend, particularly this year, because everyone wants to be first to market with their programs and artificial intelligence, and they're not waiting. And so with that said, the stock price just continues to inch higher as we move into the event next week. Now, looking at the numbers for next week, EPS is expected to grow about 17 or so percent to $6.73, and sales are expected to be pretty robust in the mid-teens in terms of growth at 47 billion versus 40 billion last year. But even as the stock continues to move higher, over the past year or so, in fact, since our previous bear market that lasted through 2022, or at least until about August of 2022, the stock has been trending slowly higher over time, hitting new highs as of late. And if you look at now some of the valuation metrics, even as the price is rising, the earnings estimates continue to rise. And for 2025, just going back to last quarter when they reported, they were expected to earn about $24.50, and now that number is continuing to move higher at about $25.40, which is an earnings multiple for this year at around 25 times. Now, that's important, obviously, because we like to look at value. Their EBITDA estimates for growth are expected to be 32% in this year. And historically speaking, if you look at the earnings multiple on a 5-year basis, it's right around 23 times. So it's not trading at a very lofty multiple, but relative to that EBITDA growth estimate, maybe one would say that it's still relatively cheap, irrespective of the fact that the stock price continues to hit new highs.
George, this kind of reminds me of the metaverse spending. At first, the market was really enthusiastic about it, but over time, they were a little bit concerned when it came to free cash flow. Do you think that we might be seeing and having this same type of scenario this time around, or is this going to be different this time? Because there will be an impact when it comes to that free cash flow number, which obviously Meta has done a phenomenal job with keeping it pretty high.
Yeah, I think so. I think there obviously will be an impact because of the additional spend, but I think the situation is different this time, to be honest with you. I think the metaverse spending obviously was not was frowned upon by investors. They sold it off. There was 2 quarters of just decimated declines, and so what did the Zuckerberg do? He basically pared back that spending because it wasn't going to manifest into accretive earnings, and that was more of his personal vision versus efficient capital spending, and at the same time, he cut expenses in terms of headcount. And look, he's been cutting headcount as the stock price continues to rise. So I think that headcount cut is going to help offset the additional Capex spend. So I think there may be some questions about how fast this spending will manifest into earnings. That may create some volatility into the print next week. But with that said, I think that you have to consider the environment is flipped right now. The companies that are expending more trying to get first to market in AI are actually being rewarded versus the opposite being the case in traditional market environments. So I think that there's an accelerated demand for AI spending right now, and that might be a given. That's where I think that the market will give Metaverse and some of these other big players like Broadcom, for instance, a pass.
George, you're right. They are, getting rid of other talent as they bring in AI talent, right? And they're improving and making improvements and adding Capex to this Llama model. But it all leads to, George, as you know, digital ad spend. They're trying to attract digital ad spend by making the most accurate target for these advertisers to hit their customers. And that when that all happens, what they seem to be doing, George, seems to be working.
Definitely, and that's the thing. I mean, the faster they deploy their llama models for artificial intelligence, the better monetization rates they'll have, the better yield on advertising spending they'll earn, and that'll trickle down to net income of the business. And that's what I'm suggesting, that it's happening so fast that this may be a situation where they get a pass because of the fact that they're spending more money. And like I said, in traditional markets, in traditional cases, that would be frowned upon. But I'm using, again, Oracle as an example. Oracle hasn't earned any money from what they anticipate to spend, but the market rewarded them because they're trying to get them to spend faster because of the accelerated deployments of AI and the manifestation of AI towards earnings.
George Tsilis giving us his in-depth look at Meta Platforms after this announcement today of a $65 billion Capex spend. George, thanks for coming on as always, spending some time with us. Enjoy your weekend, George Tsilis.